When there's a liquidity event, which means the company is sold, and the shareholders here sell out, there's also a liquidity event here with the phantom stock. And if the company sold, whatever the value is of the shares that they own at this point in time, they're able to cash those out as well. And if we're looking at building wealth for retirement, if a person that owns common stock wants to sell their shares at retirement and get their cash out, a phantom stock shareholder can do exactly the same. The difference is phantom stock is not real stock, common stock in the corporation. What you do is you figure out how many shares you want to make available to all those that are participating in the plan, and then you value those shares exactly like you would the real stock that's inside the corporation. And then you offer those to the management team that you have in place. Now, there's a bunch of different ways to do it. When you start the plan, you can just award a number of shares just because people have been on your payroll and they've been around the company for quite some time. You can also put together incentive formulas, and if they hit those benchmarks, then you award shares on an annual basis. One other thing you can do is you can do something in the way of a share awarding to the people that are in finance. Maybe they're in HR, maybe they're in operations, and they don't have anything to do with sales. So you come up with a formula for those folks, but then you go to your sales team and you say, look, I want you to hit these sales benchmarks. And if you hit these sales benchmarks, we're going to award a certain number of shares based on the sales that you do. So you can custom build how the shares are awarded based on a person's responsibility. You could go to the CFO and say, look, we want to have a margin of X amount off of our business, and we want to see a net profit of such and such. And so between you and how you're handling the finances, and between the operations person and how they're handling the inside expenses of the business and the way that the operation is running, you can put a formula in place for them that awards certain number of shares if they hit these different benchmarks. So you can put in key performance indicators to allow these shares to get awarded to the participants in the phantom stock plan.